Good weekend. Ira Epstein with your financial market wrap-up, your weekend edition for this Friday, December 16th, 2022. I have listed the outside day course. It's on the website. It's now for sale. So if you go to our website at www.iraepstein.com and you go under the word education, you'll see the drop down. It's right there. Away you go. And it is a pattern you see all the time. So now let's talk a little bit about this week because it was the gang. And what do I mean by that? Well, the gang of Europe. European Central Bank, the Nordbank, the Swiss National Bank, the Bank of England, all got together and they agree with the U.S. Fed. You've got to get these rates up. The tiger in the room was certainly not Mr. Powell from us. It was Miss Lagarde. You know, you generally have to pull that bank along to get him to do anything. She's a tiger. She was held back from going 75 basis points, and she said they're not stopping till they get this under control. Well, you get all that going, and now you're talking a worldwide recession, and that's what the market freaked out on. All of the banks getting together, getting aggressive. The problem is serious, and it's stickier than a lot of people thought. And I think they're realizing that that is the case. I, for one, don't think we're getting anywhere near 2% inflation for a long time to come. Do I want to be wrong? Yes. Can I be wrong? Absolutely. But I doubt that that's the case. So I look at the markets this week and I say, well, what do you do with them? Well, the first thing is they went through a fixation, a transformation, if you will. And the chart action got very sloppy, literally across the board. It'll straighten itself out, but it did get very sloppy, and it's something that we should look at here. So when we look at the S&P on a monthly chart, you still haven't been able to get back up to the 18-month moving average of closes at all in 2022. When we look at the weekly chart of closes, you're now back down. We had talked, could you get to that? And in fact, you closed under it. So you've turned the bias of the market down. My definition of bias, when you're over that, you have an upside bias on a weekly basis. Under the 18-week, you have a downside bias. Crystal clear. When I look at the action, this tells you the craziness, all right? Look at the size of that. This is two-part action that's real important. First, you had a market that began back here in October, around the 14th or so, that went all the way up, and I think the rally has culminated now with it ending this week. Until this week's high is taken out, I think you mark on your chart, you have a trade top in place, an important one. Now the question is, when you look at it, you have what's called an outside week. Duh. That's why I started off talking to you about the outside course. It's such an important course. So now until you take this out, the odds favor the market's going to come down. The first spot that you normally go to is the closest main moving average. In this case, it's the 18-week, and you closed under it. What else? Well, you didn't make it to the 100-week. You didn't make it to the upper Bollinger Band. So it puts the market in range that if we get a big break, if you're opening the door to 36.57 and maybe the 35.45 level. Next, we look at momentum, down. Will we get a Santa Claus rally out of that? The Santa Claus rally in many quarters begins. Some people think it's now this week. Others think it's literally from Christmas Day until the 2nd of January. This time, I don't think you're going to get it this week. Why? I think it'll be very hard to take out this week's high. So I'm looking for the market to come down and from some lower level to give us a bounce, but not one that takes out this high. I think a trade top high of importance was put in this week. The same thing happened in the Dow Jones. You're turning your momentum down. You've had this rally since, if you look at it back here, all the way up. Couldn't get up to the upper Bollinger Band. Fighting, present tense, a battle at the 100-week average. But I think that can give ground and you can go back to the 18-week. This is the market that I would be more inclined to think can give you that Santa rally than some of the others. The NASDAQ failed miserably at the 18-week moving average of closes. It's fighting a battle between the 200-week and the 18-week, looking to see what the direction of the market will be one way or the other with it. If the market can break down from here, then the 10,446 level. I want to repeat what I just said. I don't think any of the stock indices this coming week are in line to take out this week's high. If they do, I'm going to be, I can't believe that happened. I don't expect it to happen. The Russell didn't even have the outside week. It's just too weak. It couldn't get up there. The battle that is fought was at the 200-week in gray, the 18-week, and if it starts down, maybe back here at the 1643 level. In the bonds, will they keep going up? That is the big question. When they go up, you lose yield. So what the market is doing is it's changing its story. I don't think it's looking any longer for the Fed to pivot because it gets scared of the market. If you saw today, Loretta Mester came out from the Cleveland president, and she's very vocal and very, very good. And if you listen to her, she makes a lot of sense. She said, it will take an awful lot for that to happen. That's not even on all the members that were in the meeting. They're not talking this year coming up whenever the Fed stops, wherever that number has to be. They think it'll stay there the remainder of 2023. Obviously, they're data dependent, and obviously, if the data warranted it, they're going to do something else. They're not going to put their feet in cement. But it tells you that they're not ready to pivot if the economy weakens, and the reason for that is they got to beat this inflation genie down, and they all to every member are concerned that the labor market is so strong that the only way to do it is hurt the businesses that employ them. She went on properly, and so did some of the others that I was listening to, and they say the hardest thing is it's not industry, it's the service sector that is so strong on the labor, and that's a son of a gun to break. Will this market peak out somewhere here and come back to the 18-week average? I think that's what you should expect. You're already doing that in the 10-year notes. You're doing what I call wobbling now, back and forth. Could you see rates go even lower in the back end? You could, because you're going to start discounting the recession that we hear from everybody about. In the dollar index, you got to be careful here on a weekly basis. You're already into area where you either embed or you're going to get a correction to the upside. It's going to be one of the two. The setup is here. You're knocking on the door of the lower Bollinger Band. You didn't hit it. You missed it by about 18 points. And if you get over 105.80, you can get more of a bounce. That's what you have to look at in the market to see what's going on. In the euro on the weekly chart, did we embed? Well, I don't think we did. Both numbers here are over the 80 level. Over here, they're over 80, but I can tell you already the next week, they weren't. So you need another week to know if it can embed and lock in and say, hey, the dollar's going down even further, or we've rallied up enough, it's time for a correction. It is a rough spot. And on the daily chart, you just barely missed keeping the embedded reading. By half a point, you're going to lose it on Monday morning unless you gap higher in the market, and then it's going to be a battle all day to see if it stays lost. In the Canadian dollar, you rallied up against key resistance. This is a bearish market. The pros, I think, are going to sell wherever the 18-week average comes in with a straight stop over 74, 71.5, looking to see can they drop it down into that lower Bollinger Band territory. The Japanese yen, to everyone's surprise, is one of the stronger currencies. I mean, it almost makes you laugh. It was so weak so long, and the bank did nothing. The world doesn't believe the bank can stay like that, and you've got a market that's still bullish. Is it ahead of itself in getting into rarefied territory where it's not embedded and ahead of itself with strength? Yeah. I don't like when I get one of the legs of this stochastic over 80 on a weekly chart and the other's nowhere near it. In Bitcoin, I'm fearful the other shoe is here, then it might drop. You saw the French accounting firm that does Binance and these others, and it always goes in and it tells you, hey, the assets are there and so on. They said they're dropping all their crypto clients. You think that's something to be scared about? An accounting firm, a big one, that did this is walking away from it. It tells me that if I'm there, there's control going on in that company. Something's wrong. I don't know what it is. Something's seriously wrong. And if you don't think that's a warning, you got a problem, okay? I've seen these things. You go into, how do I save my company? The authorities could be coming. I'm giving you guesses. Do I know? I know nothing more than I read like you did. But when that occurs, the horns go up immediately and you go, something is wrong. I've been saying there could be another shoe. Could that be it? Could some of these companies, not their accounting, be that those coins aren't there, those tokens? I don't know. I have no idea. In Brent versus WTI, the market still looks to me like it wants to narrow in even further. Now, the Biden administration today put out tenders. They want to buy 3 million barrels of oil now for delivery in February to start the replenishment of the strategic reserves. So we're seeing it. They're coming in on a big break. You got to give them credit, okay? I'm amazed. They sold in the 90s. They're buying it back near 80. I am impressed, okay? Here's WTI, $74. They sold it near 90. That's a heck of a trade. I'm very critical most of the time of them. I know they got lucky, but very, very, very good trade. But I don't want to see 3 million. I want to see 180 million barrels bought. I want to put everything we had for the strategic. 3 million's too little. Take advantage of these prices wherever they're going. $60. I don't give a darn. Replenish whatever thing is there. Now, you could be getting more bearish in crude. What if the 18-week gets under the 100? That would be a bearish sign in the market. Could be opening the door for your $65 mark before it's all said and done. Rebob gasoline, I don't want to be short anymore. So from my perspective, and I know this is not the time of year where people go driving, but your first test of the 200-week average. No. I like to walk away. That's a big time number. That's a 4-year moving average. It's a weekly chart. Time to walk away from being short on that. So you put it all together, you try to come up with a game plan, you look at the Bollinger Band, those moving averages, and you put it together. How do you do that? Well, one of the ways is with our Bollinger Band course. And remember, we also have the Outside Day course now. That just came out. So on the Bollinger Bands, take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.